This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, September 15th. In the stock index futures, we are seeing prices higher this morning, ironically due to a series of economic reports here in the U.S., all coming in weaker than expected. We did have retail sales a little bit softer than most analysts had anticipated. We had the New York Fed Manufacturing Index coming in at a very big negative number when a very small negative number had been anticipated. Also, we had industrial production and capacity utilization both coming in weaker. So these weak economic numbers helped stock index futures to advance on the belief or the logic that any weakness in the economy will cause the Fed to hold off on a rate increase. Of course, the Fed is meeting this week, Wednesday and Thursday, and we will get a statement from the Fed following the conclusion of the meeting Thursday at about 1 o'clock Central Time. So our feeling is that the Fed will not be raising interest rates at this week's meeting. In fact, there's a very good chance the Fed cannot raise rates at all this year. So stock index futures today, I think, will continue to work a little bit better. Fears of a Fed rate increase on the part of many analysts may limit gains, but at least for today, I would expect at least a positive tone to the stock index futures trade. Now, moving over to the foreign currencies, we did see the dollar index advancing, being supported by the feeling that the Fed could raise rates. At least that's the media feeling. Some analysts are leaning that way, which of course we are not in that camp, but that helped the dollar index to advance early. Our feeling is that these gains that we have seen in the dollar will probably melt away, and I think we can see a move back to lower in the dollar index on the day later this afternoon. Also, we are seeing the Japanese yen trading a little bit better this after the Bank of Japan refraining from adding more economic stimulus. However, there is a growing feeling that they could be adding to their quantitative easing program, possibly at their policy meeting next month. Also, we have the British pound trading a little bit lower this after UK inflation numbers on an annualized basis coming in at unchanged, although that was the anticipation of an unchanged inflation rate. The question has to be asked, how can the Bank of England raise interest rates with a zero inflation rate? I think it's going to be very hard for them to justify a rate increase, so that having an impact on the British pound. Now, as far as the interest rate markets are concerned, futures trading a little bit lower at the long end of the curve. Once again, more and more talk about the Fed raising rates, at least from the media, so that's somewhat of a negative influence. However, financial futures markets predicting that there is only a 25% chance that the Fed will raise at this week's meeting, and we totally concur that there's a very limited chance of a rate increase. And as we predicted earlier, no rate increase at this week's meeting, no increase probably for the rest of the year, and it may be well into next year before the Fed has the ammunition and the potential to raise interest rates. So once again, good trading, everyone, and remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.